You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets. Hello, welcome back to another episode of The Builder's Mindset. And, this industry never ceases to amaze me, and it always seems to provide fodder and stuff to talk about. Just when I was thinking I was going to run out of topics, the new home company announces publicly that they are purchasing Landsea Homes. So we should be finishing up our Q1 earnings report soon. I think the next episode, though, will probably be on the preliminary because I believe, I think Toll and Kahav, as we were talking about, coming first. Right behind that will be KB and Lennar, and then it'll be everybody else for Q2. But everybody's in as of this morning for Q1 filings and calls. And so we're going to work feverishly between now and the end of the weekend to get the earnings summary of margins updated, because I, like a lot of people, are really curious to see where we land Q1. We started doing the earnings summary in Q2 of last year. But I do have all the gross margins for all the public builders for Q1 2024 teed up and ready to compare to their Q1 2025, because we want to see and share with everybody what's going on with the builder margins year over year, because everywhere I go, people are still talking about tariffs. And I want to say that I believe this purchase of Landsea by New Home tells us something bigger. I think it validates what I've been saying episode after episode. So going to be a short episode because we figured we just covered this. This will be the main topic, and how I think this relates to the greater industry, what I think this tells us for mergers coming up, what I think this tells us about the market as a whole. So a couple of really interesting points right out of the gate is Landsea is a public company and the new home company is a private company. Now, they do have public money in some way, and I'm not a financial analyst, but I will say is like New Home, their owner is listed as Apollo Group Management, and they're a hedge fund, but technically speaking, the New Home company is a private home builder. They're not a public builder. They don't have to publicly do earnings call reports, and so one of the interesting things, Landsea is public. So the interesting thing is, as it started, is Landsea. It says, New Home Company will take Landsea Homes private in a deal that values the publicly traded home builder at $1.2 billion. So this will most likely, I don't know when it's going to close, but will probably be the last quarter that we do Landsea. They'll drop off. They won't be public because the earnings summary report that we do, we depend upon. We can only do the public home builders because they have to produce certain filings that everybody has access to. So that's one interesting point. Second interesting point is the New Home Company, new branding, it's now just New Home Company. They, on the Builder 100 list based on 2024 closings, they were the 62nd largest builder in the country with 1,123 closings. Landsea was the 33rd largest home builder with 2,831 closings. So the first interesting thing is that the smaller fish is eating the bigger fish, okay? So what they're going to end up with is basically based on 2025 closing numbers, they would be 3,954 closings combined, which would put them right at 25th in the nation. So a couple of interesting things, right? So like not always, but often the larger builder purchases the smaller builder. Secondly, the buying builder not only is smaller, they're private, and so they're going to take that entity, Landsea, they're going to take them private. So Landsea is no longer going to be a public company. And I think it describes this as, what does it say? So they will no longer be listed. And so third important or interesting fact is New Home Company offered Landsea Homes shareholders $11.30 per share in cash. That was 61% higher than Landsea Homes closing price on May 12th. Okay, I look back kind of at their history on the stocks, and that's about where the value. I think earlier this year, late last year. So it's not a super crazy number, generally speaking, and I don't know where everybody sits with it, but it gets their market value back to where it was sort of before all the home builders really started to tank. All right, so let's see. So now that's three interesting points. Number one, they're going to take private company, buying a public company, taking that public company private. Number two, the smaller entity buying the larger entity. Number three, them offering shareholders a 61% premium over their prior day's stock price. And here's another interesting one. Get ready, because we're going to hear a lot more about this. The transaction is supported by the Apollo Funds, the majority shareholder of New Home since 2021, which is committing $650 million of new cash equity. Wait for it. Here's the fourth interesting one. Millrose Properties, remember that name? Talked about them a fair amount, is providing committed land banking capital. All right, so watch that. Now, this article here from Builder quoted Ali Wolfzahn, the chief economist, as saying, "This merger is a reflection of today's housing market. In an environment where land prices are high, building material costs are rising, and consumers are showing an acute sensitivity to housing affordability, economies of scale are key, and this larger organization should see many benefits." Now that'll be interesting. The reason being is because you're talking about a number 62 builder and a number 33 builder. We're going from 1123 to 2831. So they're going to go, basically 4,000. We'll call it. You've got a 1,000 home a year builder buying a 3,000 home a year builder going to a 4. Does that get them great economies of scale? I think it goes to some degree market by market, and then yes, also there's some national agreements and deals that they can get. I think it will open the door for some national deals for them that maybe would not have been there for them, or not have been as lucrative for them, at 1,100 or 2,800 homes. I think this puts them in a better category. The Millrose land banking being private probably gives them a little bit more, in my opinion, juice in the tank, a little more acceleration, a little bit more horsepower to grow from a land acquisition standpoint. And so I think, though, the bigger tell is that, where was that? Somebody said, so this merger is a reflection of today's housing market. And then who said that it was, our acquisition of land is an important next step in New Home's long-term growth strategy, said Matt Zaist, President and CEO of New Home. He described them as highly complementary businesses and teams with shared customer-first values. So, and then the transaction underscores our high conviction in the housing market opportunity and the teams at New Home and Landsea. So, I'm not familiar or privy to New Home's margins because they're not public. They don't have to publish them. We obviously get to look under the hood, or we have historically, but this will be the last time we get to, most likely, in terms of their margins. There have been some challenges, I think, for Landsea, and I'm not being in the weeds with it. I think they have some land things and issues, which they're non-GAAP. We talk about this in home building a lot. Like GAAP is GAAP, general general accepted accounting principles, I think is what it stands for. And then there's non-GAAP. So the general accepted accounting principles, as far as I understand it, and not being a CPA or a finance guy for the most part, but I'm more I'm a grunt, I'm an operations guy. But my understanding is the GAAP measures are what Wall Street really looks to and looks for. That's your true number. But in home building, we like to talk about how they're operating. And so in home building, you can have assets that are dragging you down, where you're taking a loss on a piece of property that you've owned that's just been getting hammered because it was a bad deal, something happened, you bought an $80 million, $180 million property in California, and all of a sudden the entitlement is like, you're just like, you thought it was going to get entitled, and now it's not, and you're shut down by Coastal Commission or somebody else or whatnot, and you got to take a hit because that $80 million property is now worth $8, let's say, or whatever the case may be. So their non-GAAP measures historically are like in the 18.5 to 21 range, so respectable. But what I see here, for me, I think this goes back to really, yes, what the first part of what Peter Sinensky said from Apollo Group. The transaction underscores our high conviction in the housing market opportunity. So I think you got a couple of things. I think more so these two companies combined are going to give them some scale and leverage in certain markets. That is a one, yes. Number two, I think they're small enough still yet at 4,000 homes a year combined, where they would have been 2025. They're small enough where I can kind of get the economies about, they can get a little bit of that scale, putting the two entities together, and then they're still small enough where they can grow in a big way. We've talked about this, like, it's hard for Coke and Pepsi to maintain their market share, let alone grow it. Whereas, these new soda companies that pop up or whatnot can grow. So, the combined entity will not be rivaling the top 10 builders. They're not going to be like chomping at, even Meritage's heels from a closing perspective anytime in the near future. But does that 4,000 become like 6 in 2 years, which is huge, right? Have a 50% growth. Absolutely. And so I think there's that. I think you have this sort of it underscores the strength they believe in the market, because the market still has to be solid for a smaller builder to grow 50%, right? It can be a little easier for them to grow compared to, like Lennar's not going to grow 50% year over year, but somebody that's doing 2, 3, 4, 5, or 6,000 homes a year, can they grow 50% in a few years? Absolutely, they can. The interesting thing is, like, if you look at Taylor Morrison, here's an example. Taylor Morrison, big lofty goals that they've set out there that they're going after. I think they want to get to 20,000 by 2030. I think is what it is. So they're trying to go from 12,000 and change, 13,000 ish. They're trying to get to 20,000. You could argue that that's about a 50% growth in 5 years. That's an ambitious goal, and I'm excited to watch that trajectory for them. It's not the same for a 4,000 home division, company to go to 6. So, but I don't want to discount, though, it's a lot of work, it's integration. And so when you put all of this together, you say, hey, smaller private buys a bigger public. We're going to take the time and effort to integrate these two companies, which I believe they ultimately will, no matter what they say right now. When you look in 2 years, I believe they will, they'll be the same company. They'll be integrated. I don't think you'll have overlapping divisions in markets. You're not going to have 2 divisions in Southern California. You're not going to have 2 divisions in, any markets where they overlap each other. They're going to bring them together. That's some of the economies of scale that you get in terms of overhead savings. Try to drive their SG&A down somewhat, but it just speaks to the confidence. And I want to go back to, we talked about headlines and negative headlines. And, right now, I think what we're seeing, I'm going to go touch the third rail. So if you've made it this far into the podcast, give yourself a high five because I'm about to touch the third rail right now. It seems like almost everything that comes out of the mainstream media right now is negative, with a slant towards negativity of things that the current administration, I'll say it, Trump, his administration is doing. This is the kind of stuff, in my opinion, that should tell Wall Street and Main Street that businesses believe in not only housing, but in America and where it's headed. Because you don't make a $1.2 billion acquisition when, here it is. New Home Company is the 62nd largest builder in the country with 1,123 closings, and wait for it, a revenue of $927 million. They paid more for Landsea than they had in revenue. And I don't think that's a bad thing. If you look at the stock value, I don't think it's bad at all. You know, I'm very bullish on home building. I think you have the Apollo Group and New Home Company, a very respected home building, new home builder in the industry, with pedigree and experience behind it, putting up their capital, their time, and their effort to go after a larger competitor. If that doesn't signal confidence in the home building industry in general, yes, I agree with Ali. This will get them economies of scale that will help the two entities together buy better and hopefully perform better after the integration happens. But it's painful to integrate companies. I've been around for some of these. But what I will say is, if they're going to do it, that tells you that the leadership at New Home Company and Apollo Group believe not only in home building, but the greater economy. That's the kind of headlines that we should be talking about. That's what we should be focused on. So I think this is great stuff. I think it's exciting. It was interesting when it all came out. I think yesterday was the announcement. I had people texting me and hitting me up on LinkedIn, and I'm excited to see where this goes, how this unfolds. And I think this is great news for home building. I think because of that, you're going to start to see some more mergers coming down the pike. And we got one less public home builder in the mix, but it's going to be interesting to watch them close that deal. We've got other things rolling and working. The Millrose thing, I had to mention that. I got to mention that. They're already going to start to be a player in terms of land. So let's see what happens. Thanks for joining us. Thanks for sticking around, and you have an amazing day.
You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.